Welcome to the Bull Strangle newsletter, where we explore powerful options trading strategies. This newsletter combines stock selection with options trading to maximize returns while managing risk. Our strategy consistently outperforms the S&P 500, offering tailored variations for different risk tolerances. For a detailed review of the Bull Strangle strategy, go to our YouTube channel Dual Edge Research and view the strategy overview and a comprehensive 4-video series covering options basics, strategy, risk optimization, and newsletter details. Our core strategy combines stock ownership with dual option income generation. We'll buy stocks and sell both covered calls and cash-secured puts at out-of-the-money strikes to maximize premium income while maintaining controlled risk. This video provides a step-by-step process to demonstrate how the newsletter watch list is developed and how the watch list is combined with the current holdings to determine a short list of stocks and ETFs that will be the focus for trade execution once the market opens on Monday. The Bull Strangle strategy is a disciplined income framework, but its success starts long before options are sold. At the heart of the approach is careful stock picking, a process that screens for quality candidates capable of supporting the strategy's unique demands. Choosing the right stocks can be the difference between a portfolio that compounds consistently and one that stumbles in volatile conditions. The selection process begins with running a wide range of stock search engines and screeners. These tools identify candidates that not only meet technical criteria but also align with the mechanics of the Bull Strangle strategy. Every search engine is set to include 4 essential filters. A stock price range ensures the trade size fits capital allocation rules. Implied volatility captures stocks that provide sufficient option premium without extreme risk. No earnings in the next 30 days avoids exposure to unpredictable earnings announcements. Weekly option expirations guarantees the ability to trade in the structured 4-week cycle. This systematic screening produces a list of candidates with the right balance of liquidity, premium potential, and stability. After generating the initial list with the search engines, we generally have a list of several hundred stocks and ETFs, over 500 for the monthly expiration cycle. From there, the list is refined using technical analysis. The final selection favors stocks that are narrowly above at least 2 of the major moving averages, the 20, 50, 100, and 200-day simple moving averages. This positioning signals that the stock has underlying support and upward momentum without being overextended. Stocks trading just above these levels provide a stable base for the strategy, making them less vulnerable to sudden downside breaks. The final step in selecting stocks for the watch list involves a close examination of the option market itself. For each candidate, both the call and put options that are just out of the money are analyzed to ensure they provide sufficient premium relative to the underlying stock price. Specifically, the goal is for the combined premiums of the short call and short put to exceed 5% of the stock's value, creating a meaningful income cushion that supports the Bull Strangle framework. This premium threshold ensures that each trade generates attractive risk-adjusted returns while maintaining flexibility across varying volatility environments. At the same time, stocks with wide bid-ask spreads are eliminated, since illiquid options can distort pricing and make execution inefficient. By filtering for high-quality liquid options that deliver robust income potential, the strategy maintains its focus on consistency, efficiency, and disciplined risk. The Bull Strangle thrives on consistency, not speculation. High-flying growth stocks that have already surged far above their moving averages may look attractive, but they often carry outsized risk of sharp pullbacks. On the other hand, stocks trading below key support levels are more prone to continued declines, reducing the likelihood that option premiums will be sufficient to offset losses. The sweet spot is in stocks with strong support just under the price, where technical stability aligns with premium collection. These setups allow the strategy to work as designed, generating steady option income while reducing exposure to dramatic price swings. Once the watch list is complete, It will contain around 20 stocks and ETFs across many of the 12 categories. The next step is to generate a short list of candidates that fit within the current holdings. The bull strangle strategy is built on discipline, diversification, and a consistent process that ensures every trade fits within a carefully balanced portfolio. Each week begins with a detailed review of the open positions to assess how capital is distributed across sectors and market conditions. This analysis serves as the foundation for building the next round of trades. The first step is to evaluate the current portfolio composition. Each stock currently held in the bull strangle strategy is categorized by sector, such as technology, healthcare, energy, or consumer discretionary. This sector mapping highlights where the portfolio is heavily concentrated and where it may lack representation. The goal is to maintain diversification so that the strategy is not overly dependent on any single market segment. Next, gaps in underrepresented sectors are identified. If certain sectors have no current exposure or only one position, those areas are prioritized for potential new trades. Conversely, if a sector is already well represented, it is temporarily de-emphasized to prevent overconcentration. Once the sector gaps are clear, the system turns to the bull strangle watch list. From this list, candidates are selected to fill the sector voids, forming a short list of trade prospects. Each of these stocks is technically sound and fits the broader objective of balancing sector exposure while maintaining high-quality setups. Finally, on Monday mornings, the short list becomes the focus for trade selection. Market action at the open plays a critical role in determining which candidates are actually traded. If the market confirms strength and price action supports the setup, positions are initiated. If volatility spikes or price action turns unfavorable, trades may be replaced. This structured process, beginning with portfolio analysis, progressing through sector alignment, and concluding with real-time market confirmation, ensures that each bull strangle trade is selected with precision. It allows the strategy to stay adaptive to changing market conditions while preserving the diversification and discipline that drive long-term success. Looking for consistent profits in both stocks and commodities? Now you can get 2 powerful newsletters for one simple price. For stocks and options, the Bull Strangle newsletter shows you how to combine stock ownership with dual option selling, a disciplined strategy that has consistently outperformed the S&P 500. For commodity futures, the Smart Spreads newsletter focuses on seasonal commodity spreads, a proven low correlation approach that thrives in all types of markets. Each newsletter is designed to deliver consistent income on its own, but when used together, they create a complete, diversified trading approach that works in any market environment. Subscriptions start at just $49 a month, with deep discounts on 3-month, 6-month, and annual plans. And right now, for a limited time, your first month is only $1. There's no long-term commitment. Cancel anytime. So don't wait. Visit bullstrangle.com/products, that's bullstrangle.com/products, and start trading smarter today with the Bull Strangle and Smart Spreads newsletters.